The cues are pretty negative as far as the equity market is concerned. We're reeling under pressure. One of the reasons is the spike in crude oil prices. It's a good time to bring in Manisha and get a sense of exactly what is going on. Good morning, Manisha. Your market is spooking hours.
Oh, well, for once, yes. The crude oil prices are doing the trick. We have seen a couple of dollars of gain come in for the crude prices in this week itself. And this is after a couple of percentage point of gains that we saw overnight, 0.5% up yet again. And this is on the back of various strong fundamentals. One, of course, is the positivity that the US and China trade talks bring to the market. You also are looking at the kind of global supplies we are looking at, and the latest report from IEA says that they are looking at global supplies going down by 1.4 million to nearly 99.7 million barrels per day, and the demand estimates for this year have been at 100 million barrels. So clearly you are looking at a positive side of things. There also is decline in sense of Venezuela exports, sanctions on Iran, Saudi pledging further cut in exports and supplies. So the world really seems to be looking onto the positive side in sense of crude there, and we have seen prices gain up to a 2-week highs for US and 2-month highs for the Brent crude prices there. Jonathan Bharat now joins us to throw further light on that. Jonathan, hi, good to have you. How are you reading the global cues this morning, and what is your sense? Have we factored in all of that for the crude prices, or are you looking at further gains from here?
Well, good morning. Look, I think when you really look at the ledger, the supply side, it appears that we're seeing a little bit more of a crimp. When you look at Venezuela, when you look at Iran, when you look at prospects over the US trade talks, you get a sense that the supply is sort of under a bit of pressure. You also take on looking what with Saudi Arabia. So I think any positive economic news should see prices higher. We are looking for prices to break through this $64 a barrel basis the Brent, probably head up to around that $68. But at the moment, I think there's a positive outlook brewing for the commodity.
Jonathan, also coming on the demand-supply side of it, the IEA report saying that the global supplies are looking to go down to 99.7, where there have been various reports which expect the demand to be exactly that, or even 100. I mean, that, of course, is a bullish, ambitious view or a number that we've been talking about. How do you look at that going forward in this year?
Well, look, I generally think, I think supply is there. It's a question of how they turn it on and who's actually supplying to the market. I do get a feeling that when you look at the US, when you look at their production, I think that there is a feeling that the US wants to be seen as more of a supply to meet that gap, and if that gap emerges, I think the US in itself is sort of trying to or looking to engineer a position for itself, obviously as a major supplier. So when I look at the supply and demand side of it, I get a sense that the supply side, or the economic side of it, is not going to be as strong what people expect. Therefore, demand won't be there. Therefore, it should come lower. But on the flip side, the supply side to me is more important because you've got two major players trying to shorten supply. And that, I think, will see prices at the top side.
Oh, absolutely. That point is well taken. One word also on the Chinese data that's come in today, the trade numbers. Of course, today and tomorrow is going to be heavy because you have the vehicle sales numbers coming in. It also is about the money supply, the yuan loans. So it is going to be quite a bit of a number crunching to do. But with the kind of China trade data that we are sitting on right now, where we have seen better numbers actually come in, and that clearly has been one of the reasons that we've seen support in commodities, not just crude, but many of the industrial metals as well. What has been your sense from these numbers?
Well, look, I think when you look at it, when you look at the trade data, much stronger than expected.
Yes.
You get a sense that, that there's a lot more optimism also surrounding, the China and the US and the trade. Donald Trump coming out and saying that all going well, he'll extend his March 1st deadline. But I think and we have to remember that China, through its series of stimulus that it's put through the market over the last couple of months or even 6 months, that is starting to feed through the economics. Okay. That stimulus is starting to come up with some positive numbers, and as a result of that, I would expect to see better numbers out of China for the foreseeable future based on the stimulus that was put in 6 months ago.
Okay, all right, Jonathan. Thank you very much for joining in and giving us those cues on how the commodity universe is shaping up. Thank you, Manisha, as well, for putting things in perspective. Quick break right now. On the other side, we'll be discussing market technicals with Ashwini Gujral, and we will also get you some top trading ideas.